Exclusive conversation on the expectations from the budget 2022. The budget of hope, as we call it, is powered by Investonomics, an initiative by ICICIdirect. To talk on what commodity market participants are expecting from the budget this time, joining me now is Mr. Narendra Wadhwa, President, Commodity Participants Association of India. Welcome, Mr. Wadhwa.
Thank you. Thanks for having me.
What's on your wish list this time, Mr. Wadhwa? It's a long-standing demand of the commodity participants to lower the CTT. Do you expect this to happen this time?
Yeah, CTT has been our demand for last 2-3 years. And our rationale for this is that the cost of transaction in India is too high. And our business is going to overseas exchanges. We want to bring it back. The slogan of this government is Make in India. We want to have our slogan of Trade in India. And on that basis, we have submitted our presentation to the Government of India and the SEBI. And in fact, SEBI has also recommended rationalization of cost of transaction as we want to deepen the commodities market. In the last 2-3 years, SEBI has allowed various institutional players also to participate in the commodities market and deepen it. And the very purpose of these exchanges when they were established in 2004-5 was cost risk management and efficient cost discovery, price discovery. So hedging is a major part of this market, commodities market. And in our rationale to our submission is that it's a quite elastic thing for commodities market. Once you increase the cost, the trade goes away. And once you decrease it, because in 2013, when the CTT was introduced, we used to have a daily volume of 80-90,000 crore per day. Now, with the introduction of CTT, our volumes for last 2-3 years has been hovering around 25,000 to 30,000 only. So it has taken a nosedive, and they understand, they discuss it, and in last 2 years, the budgetary scope was not there. Ministry was telling us that because of the COVID and the health issues and government's expansion plans, they were not able to do it. This time we are quite hopeful that we will get some relief in CTT.
Mr. Wadhwa, is CTT only the issue that commodity market is facing, or you want some other reforms to be done to deepen the commodity markets in India?
So again, I'll reiterate that in 2004, very purpose of these exchanges was to bring on board the farmers. So they face a post-harvest issue. So we have to fix those issues also. And major issue being the infrastructure. Agri infrastructure is not in place in India. We don't have enough warehouses and silos. So farmers they have their produce and they go to mandi. They don't have any space to store those goods. So they have to sell it at whatever rate they get. So we have to ensure that, and we have submitted that there should be public partnership concept for this infrastructure to be built so that farmers get their dues. And the slogan of this government of doubling of the farmers' income will be there once these infrastructure are in place.
Okay, Mr. Wadhwa, as we know, agri reform bill that was in process of being passed and implemented is now not being implemented because of the issues that we all know. Do you think that kind of reforms are really required?
See, there is a continuous demand from the various sectors, and from our association point of view, CPI, those reforms were very much welcomed by us, and it was towards the doubling of the farmers' income only. And so it is not there, but it will come in different form, I feel. And farmers will be, and each and everyone in this ecosystem, agri ecosystem, will benefit from these kind of ongoing reforms by the government. So from our derivative markets point of view, SEBI has been proactive. I'm part of CDAC committee also. New contracts are being introduced in coming time, and these initiatives are towards deepening these markets only.
What is the difference between the CTT that is implemented in India and in countries like Europe and COMEX?
So it is nowhere in any other country. France once tried to introduce it, but they rolled it back. So India is the only country where we have a transaction charges like CTT. So our submission also have these points that nowhere in the world these taxes are there. So earlier when it was introduced in the form of STT, we used to get 88E benefit. Means whatever we pay towards STT or CTT, it used to be taken as a advanced tax only. So in our current year demand also, we have said if you have stretched in your balance sheet, in your budget, you can at least give us that 88E benefit so that we take it as an advanced tax rather than a transaction tax.
Do you see that happening this time?
I am hopeful that the CTT will be reduced to some extent, say 500 rupee instead of 1000 rupee.
Is that only, I'm just repeating my question, is CTT only the issue that commodity market is facing? Because there's a very thin line between speculation and hedging. We are seeing more of speculation on the commodity markets happening in recent times rather than corporates coming and hedging their positions on the exchanges. What do you have to say about this?
Yes, I agree with you. So far, although we are, 18 years have passed from 2004, and only financial participants could participate in this market. We wanted real players, spot market players, hedgers, and the real users to use these markets for their hedging purpose. Again, I reiterate that very purpose of these exchanges and markets are efficient price discovery and efficient price hedging. So once they start, and there are indication that FPOs started participating in these markets by hedging in the markets, in the agri market. So are the bigger players like Hindalco's and the Adanis of the world. They started hedging in these markets. So and the institutional players are also like mutual funds. They also started participating in these markets. So going ahead, I think there will be more participation from all across, and it will not only be a speculative thing. Again, I'll again rebut this thing that these markets are for only speculation. These are very potent instruments and institutions used by all over the world for hedging purposes, and we should have those things. And and there are many studies by the government of India, RBI, that there is no link between derivative markets and the inflationary trends. Spot markets and real markets have their own dynamics. It's based on demand and supply only, and derivative markets only are used for the hedging only.
Mr. Wadhwa, metal space is a buzz. We all know metal prices are skyrocketing. What is your expectation on this side, and any new contracts in the metal space that would be floated in times to come?
All central banks have printed money. There is a huge demand. There is a disruption in the supply chain also, and much of the business is coming to India. So the inflationary trend, be it in metal or other goods, it is international, not specific to our countries. And these markets are about these trends only. Whenever there is a spike in the prices, these markets are to be used for hedging. So this was we have given our submission to the government. As you know, that a few commodities were withdrawn from the contracts, from the markets, agri commodities. And our submission is based on this fact only, that for these times only these markets are meant, for hedging and all. And once their use comes, they have withdrawn it. So we have requested them to introduce those withdrawn commodities in the agriculture space.
Thank you, Mr. Wadhwa, for your time and for sharing your views on what you expect from the budget this time. Hope CTT is rationalized given the fact that government is facing a big challenge as far as the fiscal deficit is concerned. Let's hope for the best. Thank you so much for being with us.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.